All right, and welcome back for another episode of Carnivore Trades. Today is Wednesday, May 18th, 2022. Total reversal again today. Usually whipsaw Wednesday, you get these big moves, but a lot of the time the sell-offs will be bought and the rallies will be sold. Today we're just going straight down here. Very algorithmic looking, just right in a straight line. And you can tell the VIX here early on kind of struggled to break out a bit. Now pushing higher, really been pushing higher since about 11 o'clock in the morning here on East Coast. And the VIX finally getting a bit. UVXY you see there is up about 19%, up a little bit more than the actual VIX. So a little bit of contango going on here. And again, we've been talking about the VIX making lower highs here, but it's just been tough. You know, usually when the VIX makes lower highs against the market, a lot of the time it can mean there's no conviction behind the sell-off. But I think in this instance, we've talked about this lately. This market probably needs a washout, and I would say right now, just did some analysis. I actually just tweeted about it. There is a small window, I would say, for a potential crash. And I'm not saying a crash like a 50% crash. I mean, probably a crash maybe down to somewhere in the 380, 370, somewhere in that area, maybe even 360. And we've talked about this, right? So typically when markets sell off, you get a spike in volatility, and we haven't really seen that spike in volatility. And it's more of a very, it's a controlled sell-off here. And we did fill the gap today, so there's a possibility that we could rally still. I was just talking to members about this, but we have this kind of two setups here. So we came down, we rolled over, we put in this big bottom, and then we came up to the 20, and then we had this big sell-off here. And you could make a case that we're in this kind of area here where maybe we chop around for a week and then push higher. The other side of that is, we've sold off here, and then we kind of put in a little doji tail candle, and then a 1, 2, 3 up, and then a sell-off. And then the same pattern here a month ago, or really a couple weeks ago, a tail candle, 1, 2, 3 up, and then a sell-off, little doji there, and then continued selling. So does this pattern repeat 3 times, or do they rug pull it, and do we have something like this happen? Sentiment-wise, everything I'm looking at still says that based on current conditions, this market can rally just based on the positioning. But there are, there's some work I've done here on, longer term cycles and some stuff that I've been really watching all year long that says there's a small window here for a potential washout, meaning a pretty good sizable crash. And then I would think that we probably have a pretty good relief rally into the summertime, and, sometimes in June, July, something like that, maybe a double bottom or something. But the point is, near term, not to freak anybody out, but there I would say there is a heightened probability of some type of a big washout here in the spiders and in the broad indices. One of the things here that's really kind of driving that, we didn't talk about this yesterday, but Walmart earnings. Walmart's not supposed to move like this. This isn't, it's not Netflix, right? It's Walmart, right? So, it was down like, 10% yesterday, down another 7 today. Let's take a look at the monthly here. I don't even think the 50-month, I know the 50-month moving average isn't going to save this. Now, you do have a lot of support right in this zone, but that's a big sell-off with a lot of velocity. I wouldn't touch it till probably 110. Target, down almost 30%. Again, Target is not supposed to move like this. Again, it's not Netflix, it's not Amazon, it's not one of these ARK stocks, that has no earnings. I mean, this is a humongous move. It's even filtering out to Costco. There's there's Costco. Sorry. And this probably wants to get down sub 400. So we look at the weekly there. We got that 100-week moving average. Maybe it gets a short-term bounce there, but ultimately you're going right here on Costco. And then you flip over and you look at bonds. And what are bonds doing? Up 2% here on the TLT. So what is this market telling us here? Yes, the bad retail earnings. Look at the XLY here, just getting crushed. The bad retail earnings are because of inflation, right? But this is telling us, bonds are telling us right now that, we're probably headed into recession. We're contracting. People are spending less money. So, it's the old cycle, inflation then leads to massive deflation. And it's just this big revolution. I'm not saying that's necessarily inflation's peaked or anything. That's a bold statement, but I could see if it had peaked. I could see that being the case. So again, very, very tough environment here. And when we say inflation's peaked, you'd think first of all, like, oh, that's a good statement it's good that inflation has peaked, but it can actually it can actually go from peaking to something very bad, which is, contraction, very quickly, almost overnight. So that's kind of what we're seeing here. Pretty big rout. I thought this market had a good chance to at least, you'd think at least hit this 20 and moving average, maybe fill this gap here. But really everything's being sold, and you can see it's very much a sell program. It's very algorithmic. These guys are trying to balance their books right now. They're trying to get in line with valuations, and that's really what it is. They're selling every single rip. And it's going to continue like that until people capitulate. And we just didn't, I knew that we didn't have capitulation volume here. But there was good, you look at even like an ARC, there was potentially capitulation volume there. And look at ARC today. ARC's actually holding up okay, believe it or not. It's actually not that bad. We actually just took a winner on Unity today. We picked this up yesterday right at the lows and dumped it at about $40 today. So some of these ARC stocks actually holding up reasonably well, believe it or not, but the rest of the market is not. And it's a very treacherous market. Anyways, let's flip over here. So let's look at the triple Qs. So same thing here, kind of just chopping in this range. Now there is still a chance, again, like I said, that scenario we had in March, it could play out. We had a nice candle here. A lot of times when you have a tail candle like that, you'll retest, you'll have like a retrace. So there is a chance we could rally up here. It's not necessarily dead in the water, but you got to be careful here. Don't overload yourself short or long in this market. I would advise being, mostly cash if you can, or be book neutral or something like that. Or even just trade commodities at this point, trade something that's a little less privy to the options market and so on and so forth. But as you can see, spiders dipping out here. VIX is spiking. We'll probably see a little bit of relief into the close, I would think, but we are dipping down a little bit here as we get closer to 3:30 time frame. Anyways, so Russell 2000 was a little bit stronger early on today. You can see it was making higher lows as the spiders are making lower lows. Also the semis, we'll talk about those in a minute, we're making higher lows. So usually that's a good sign, but everything just kind of got washed out here. Now this is a little bit ways from gap fill. We'll see with the Russell. I did hit a good level. We talked about this level last week. So again, there's still a chance this can hold. So I wouldn't rule anything out. Very, very neutral on this market right at the moment. But, this is a very, very, very tough environment here. Semiconductors. So got rid of this topside trend line that's been violated too many times. So we have this one up here that looks like it's holding for now. It's a good short-term trend line. And again, we had some weakness or some strength in the semis, and usually that is a good sign for the market. And we actually closed above the 20 moving average yesterday, which is something that the Qs did not do, something that the spiders did not do, something that the Russell did not do, something that the Dow did not do. So usually that's a sign of strength, but in this market, it's weak. We're in a downtrend now, so you have to respect that. IGV was also a little bit stronger, on the stronger side today. You had kind of potentially a bullish pattern starting to develop there. You filled the gap today. So again, I wouldn't rule it out. It still has a chance to move up here, but you got to be very careful in this market. Dow Transports, absolute train wreck today. No pun intended on, Union Pacific or CSX, Canadian Pacific, Norfolk Southern, all getting smoked today. Take a look at JB Hunt, trucking names. XPO, another trucking name. Jets are holding up okay. Airliners at least way off the lows here. So they've been a stronger sector as of late, and we've made note of that. But Dow Transport's just getting roasted for the most part today. Look at that, down 7% here, and in danger of losing that 100-week moving average. So Transport's in a weak technical position, and you did kind of consolidate bearish above that. So this does have legs to move lower potentially. So Dow Transport's on the weaker side. We talked a little bit about yields on TLT possibly bottoming. So it did lose that 20 moving average again. So again, maybe yields in corrective mode here. Moving forward, let's look at the 30-year. Yep, so engulfing reversal there on the 30-year. We'll see what we get tomorrow. We'll see if we get some follow through in this. High yield debt gapping down, HYG there. Same thing on the JNK. And LQD is following positively with the TLT. So this one's actually holding up okay. And it is the strongest out of those 3 high yield debt ETFs. Home builders here getting hit. Nothing really new or surprising there. ITB down as well. BNQ still holding that level there. So again, trying to fill this gap. Looks like a lot of charts with that gap there at 512, and it's trying to fill that now. We'll see if it can make a lower low or not. That was a really good measured move. It got a nice bounce off of that, but again, it's really, this market's very weak, and it's proving that it can't sustain much of a bounce. You see UVXY up now 21, almost 22% here on the day. Financials, still another kind of sector that's holding up better. XLF still down over 3%, but it does seem to be in a little bit better of a technical position, all things considered. But again, you know, it's kind of like the, I don't know how it's a good analogy here, but it's a weak name, and it's a strong name in a weak market, I guess. So it's not really much to make out of it. XPD rejecting 400, not a good look there overall. Crude here coming back in. This is another reason why, you know, again, with bonds starting to bid here, you know, could we be seeing some type of a shift in the narrative? Crude coming in down to 3% here and putting those lower highs intact. So 1, 2, 3. It's possible that we have lower highs still. And again, if you start taking out these pivots here, crude probably goes into corrective mode. So bear that in mind. XLE, beautiful trend line here. Back testing it again and rejecting. So XLE coming in, XOP coming in, as well as the OIH. Nat gas did get through my 850 level, but it is, you know, putting in a little doji. So we'll see what it does here. I still think it can move a little bit higher, but I'm not sure if it gets much through that altogether, but we'll continue to watch it for a pattern there. All right, so let's flip over here to dollar index. So dollar did scratch out a gain here, came off the lows. I still think it's overbought. I still think it's due for a correction, but it's holding up, and we'll just leave it at that until you get that daily close below that 20 moving average. It's still in a good technical position. Gold, so a nice little doji so far here. I like the tail candle. I've talked about that. And, you know, if it starts to flag here, then I think it's got a good shot to move up to that 1860 handle. But we'll see what it does here. Dollar index, obviously, it's trading a little bit more inverse to it, but some weakness in the dollar will obviously help this out. GDX, just a victim of today's selling, so it doesn't really matter that gold's green. It's just, you know, any equity is getting sold today. I believe we had a 92% down day at about 1 p.m., so we're probably even higher than that at this point. Silver also pulling back a little bit, but just off the highs, nothing crazy. Platinum, pretty good reversal there, and palladium, same kind of thing. Back testing this wedge trend line there and coming back in. And copper also, again, getting rejected at 425, so maybe down to that $4 handle, possibly 390. We'll see what happens. All right, so crypto here, a little bit on the weaker side, but you know, it's still holding up a little bit better than the equity markets. Granted, it did get really oversold last week, so you kind of have to figure it's probably not going to sell off as sharply this week since it was already oversold and did get a nice bounce. Same thing with Ether there. Wouldn't make too much out of this. All of a sudden starts bidding, I would say that's bullish equities. But if it starts selling off, you guys know that that's probably bearish equities. As Bitcoin really right now is trading like the leveraged NASDAQ, and that's really just been the case for quite a while here. But still like this tail candle, so there's a good chance that it can hold up here. But you know, it's got its work cut out for it, right? I mean, it's below all the moving averages. You got resistance above. You know, you got this nice sell-off. Now you're potentially chopping bearish, but there's a lot of demand down here in this tail, so it's going to take a while to break through that, if you ask me. All right, so let's flip back over here to the spiders. Let's see what we're getting. So we're increasing some selling here. Maybe they flush people out here into the close. We'll see what we get. VIX, UVXY up just under 22%. Looked like they were going to cover some shorts on Tesla, but that didn't even happen. They're just selling everything today. So again, big takeaway, you know, there is potential. I do see potential for a possible washout coming in the next week or so. That's the window I would give it here. If it doesn't happen, there is a good chance we squeeze. But at this point, be very careful in this market. Do not overload yourself. Hedge yourself if you can, or be in cash if you can. It's much better to be in cash. And by the way, don't short down here. Do not do that, because that's just chasing. That's FOMO. And you know, you short down here and we get one of these, you're going to be in a lot of pain. So just be very careful, be smart. I'd rather see you in cash and not get hurt until we get a good sizable capitulation bottom. You know, just play it safe, play it close to the vest. All right, guys, I'm gonna wrap it up here. Thanks for watching. Come find me on carnivoretrades.com, and I will talk to you guys all tomorrow.